Hello guys, this is a new video on the Trader Bytes series, and in the Trader Bytes series, we're going to be going over trading concepts and investing concepts that you should know in the Thinkorswim windows while the markets are still open right now, so that you can see and you can use them and implement them into your trading and investing. So today we're going to kick off this series with starting by RSI. So let's go to Add Study, Lower Studies Popular. RSI stands for Relative Strength Index, and the reason it's called lower study is because it's below the graph. So RSI stands for Relative Strength Index, and what it really means is it's going to tell you whether a stock is overvalued or undervalued. Now, this is paramount when you want to figure out whether or not you should buy a stock or sell it. After all, why would you buy a stock here when it's so overvalued, and then sell it when it drops to the bottom when it's undervalued? You wouldn't want to do that, right? So the RSI uses an extremely sophisticated algorithm to tell you whether a stock is over or undervalued. Now notice here these two tan bands, okay? Or these two tan lines, I should say. This one's at 70 and this one's at 30. The RSI gives each stock a value or a rating at a specific moment from a scale of 0 to 100. The higher up the scale, the more overvalued that stock is. So here, because it's below 30, we can be almost certain that it is undervalued, and it's clear because its stock price is dropping, and this is due to some economic trouble that happened to the S&P 500. Then here, from this range, this is fairly normal. This is what you would consider would happen most of the time. So here, slightly undervalued, exactly fair at 50. Just go up a little overvalued, and then extremely overvalued when it hits above 70. This was the case for a lot of tech companies like Microsoft and especially Tesla. Usually stocks will have an extremely high RSI when, when there's a bubble going on, and I'll show an example of that too later. So here we can see, tech stocks were doing great, so it was above 70 for the longest time. Then went slashing down. Another example of an overvalued stock, Tesla. Extremely big bubble happened. It was booming for a long time. The stock price was above the RSI of 70, even went to 90, which is really uncommon, and then really rare, and then it dropped down, and now it's going down. And now here it was undervalued or oversold because so many people were selling off the shares. The demand went lower, prices fell. Vice versa, when so many people are buying, like here, when people are buying stocks, what that does is that increases demand, therefore increasing the price. We're going to have an upcoming macroeconomics and microeconomics course, so go check that out if you want to learn anything more about supply and demand. So right now, just remember, always buy when it's low or when it's in the blue if you think it's a good stock, and sell when it's higher. So you want to do that. You want to buy when it's low and then sell when it's high. And the RSI can help you assess whether or not you want to buy now or get in now, or you want to sell right now, whether you want to long it or whether or not you want to short it, all of those great things. So yeah, that's our small Trader Bytes video today on RSI. So just remember to like, comment, subscribe. Subscribe to be the first one to learn about our economics courses and whatnot. And I'll see you in the next video. Thank you.